I think what the market shakeout has shown us is that people are starting to pay attention to fundamentals a little bit more. So we're fine with the market consolidating in here a little bit, particularly in technology, creating opportunities to add to positions or buy positions that otherwise seemed like they were getting out of touch for a little while.
Brent, you liked Amazon's quarter overall, though people who were hoping for lots and lots of profits and strong guidance were a bit disappointed. What was the main thread through this that you think was important to pay attention to? Was it AWS? Was it the overall retail momentum?
I think there's a combination of factors working in Amazon's favor, right? The retail business continues to take share gains in commerce. You have the ad business at a $2.5 billion quarterly run rate growing over 50%. You've got AWS, which is the undisputed heavyweight leader in cloud. Every company we work with in Silicon Valley is moving to AWS in some form or fashion. And that just gives them the ability to experiment in retail, like the things they did yesterday with free shipping in the U.S. Other retailers can't afford that. So these high-margin businesses continue to offset the lower-margin businesses, and margins are continuing to go up even while shipping costs and employment costs are going higher. I think the big headwind, it's just been the outperformance, the magnitude of the slowdown, growing from 30% growth into the low 20s. And then I think just the breadth of the market, right, has been led higher by a few names. And so I think you're starting to see some of that come out and go into other sectors outside of technology. But ultimately, as fundamental analysts, we think Amazon's in a great position over the long haul. And again, there really is not anything to be concerned about over that long haul. Short term, yes, given the magnitude of the run and given the valuation, there's a little bit of pause. But we just don't see any fundamental issues in the near term.
Hey, Tim, there's a rather cynical view circulating regarding this HQ2 search. If, in fact, they do go back to what had been their two largest cities in New York and D.C., whether or not they simply played these cities to get access to data about real estate, about urban planning, things they can use for their own purposes down the road. How much weight do you put into that?
I don't put a whole lot of weight that they use the RFP process to try to get at data to use in the rest of their business. It does seem a little disingenuous to put out that much information to so many different cities and choose two of the largest. But at the end of the day, as shareholders, you want Amazon to work what is in the best interest of Amazon users and Amazon shareholders. So I think that's just people looking to try to find some chinks in the armor.
Can we talk about Apple here for a minute? We're seeing it rebound today, up about 1% from where we've seen it. They had put forward some rather, more restrained guidance for the fourth quarter going into holiday sales. How concerned are you here, Brent, about the supply issues that Apple expressed?
Yeah, so I'm not the lead Apple analyst. Our tech team covers Apple. We like the story. I think the bigger concern from investors right now is just the reduction of unit numbers from the forecast. But we continue to believe ASPs continue to build. The services business, we're very bullish about what they're doing around creating this ecosystem of software that coexists with the hardware, and that ecosystem is just going to continue to keep people on the platform. So again, I think the issue at Apple and Amazon is very similar. These are unbelievable stories with great fundamentals. They've obviously been the lead horses in taking the market higher inside tech with the returns they've had year to date. And it's not surprising to see a little bit of a pullback. So I don't think anyone should be too concerned about what we're seeing across the fundamentals for either of these stories.
Tim, how are you putting this drop in Apple and the slight rebound in context today?
Well, we've been long-term bulls on Apple. We've been holders for a long time. We did not see the announcement as all that troubling. Certainly, less information is going to cause a concern on the street. And by no longer providing unit sales, I think that's going to provide a few quarters of volatility. But in the long run, Apple's becoming a consumer products company and a services company. And in order to do that, they really need to stop focusing so much on iPhone and start to focus on the rest of the businesses. So long-term, pretty bullish. A pullback in the stock gives you an opportunity, if you didn't already own it, to either add positions or build on them. And still, the stock is up 20% year-to-date, as you said, and it is only trading at a discount to the market. So it's not exactly priced to perfection at this point.